Welcome, and welcome to the night's meeting of the Audit and Governance Committee. Hope everybody had a nice couple of days. We got a little remembrance of what summer could have been like. But we can I ask members and officers to please remember to switch their microphones on and speak directly into the microphone and switch off again after speaking. Reporting officers, please use Teams. Have we got any reporting officers tonight?
No, John Chance's report is here.
Right. The meeting this evening will be live streamed to the public, and a recording of the meeting will be available on the council's website within 24 hours of the meeting. Any exempt private items on the agenda, the live stream will cease prior to the meeting moving into private. There might be a short delay. If we can go to the agenda, are there any apologies for absence?
None, Chair.
Thank you. Item 2, minutes of the meeting for the 31st of August, 2023. I'm going to go through each page for accuracy, so just in case members got anything that wants to be changed. Page 5 of 192. Page 6 of 192. Page 7 of 192. Page 8 of 192. Page 9 of 192. For those members that was here, that was in attendance on the 31st of August 2023, do you agree that the minutes are a correct record?
Yeah.
Is that a yes?
Yeah.
Oh, cool. I like a positive response. Thank you. We now move on to agenda item 3. Are there any disclosures of interest?
None, Chair.
Thank you.
Councillor.
Chair, obviously, as it is unaudited accounts, and obviously includes accounts relating to subsidiaries of the and companies that are owned by the council. I'll just want to declare my interest as a director of Luton Rising. I'm not sure it would prevent me from participating in this item.
If the discussion goes heavily into the airport, then yes, you'll need to.
Yeah, then I would at that time stop and withdraw.
Okay.
Yeah.
Okay.
Okay.
Thank you. Is that clear for the minutes? Yeah. Thank you. So, yes.
Just to put you on notice, I have a couple of questions about the airport fire, which I don't know whether would they relate to the report, but I don't know whether that digs deeper into the airport than a cursory glance over the report.
Right. If I can say, let's stick to the item before, and that's the draft statement for the accounts for 2022-23. If you've got questions relating to those items, the chief accountant is there. Yeah. Anything going forward, because we're now in the financial year 2023-24, that is not here before us. Okay. So we just clear the fire that happens today, that took place last night, into today would affect anything going into the financial year 2023-24, of which we have not officers, nor are we in the future. So I am not going to allow any questions on valuation to do with something now when the financial year is not finished, if that's clear. We're sticking to what's on the item, on the agenda.
That's pretty clear, yeah.
Okay?
That.
Yes, Councillor, did you have a question? Want to ask? No?
But we will support that because I think we're talking hypotheticals. We shouldn't be discussing that.
Yeah, we're sticking to facts, and right before us is item 7 is 2022-23. Right, so right, if I just can go back to section item 4, section 106.
Again, none that I'm aware of, Chair.
Right, thank you. Are there any urgent business?
None, Chair.
Thank you. Any reference from committees and other bodies?
None, Chair.
Thank you. And the report. So before us is item 7, approval of the draft statement of accounts And that is what we're going to ask questions, if required, to the chief accountant. Is anybody, as Councillor Hussain has declared a declaration of interest, any questions going in onto that item, you would have to abstain, yeah? Okay, I can now ask the chief accountant to present. Thank you.
Thank you, Chair. Good evening, committee. I'm pleased to present the accounts for the year ended 31st of March 2023, covering the financial year for 2022 to 2023. The report that you have identifies the various statements that comprise the accounts, and I will do a brief presentation at the end, which will give a little bit more information and background about what the accounts mean and how they knit together, because I'm mindful that the committee, or the executive committee, actually saw a report back in June that talked about the outturn for the financial year, and I can actually link the two things together and explain the differences between the figures at its highest level. So that's part of the reason for the presentation, also to give you more of a background on how the accounts knit together and why and how the reasons for the change year on year, because we typically compare the previous year with the year we've just completed. So the report covers all those things in detail, and it's probably the right point to say that we're slightly late in the publication of these accounts, which of course are draft accounts and are unaudited at this stage, for three chief reasons, which are in section 4, paragraph 4 of the report. Firstly, we were late on getting some of the valuations sorted out for HRA and some of the other assets. Secondly, you may be aware there's some of the resourcing issues that we've had in corporate accountancy, where I've had comings and goings of certain key staff, chiefly the closure accountant. So that's been a job that's been difficult to fill. And thirdly, a lot of resource has gone into supporting Ernst & Young with what we call the legacy years, and that's mainly to do with 18, 19 and 19, 20. So the focus on closing and preparing these accounts for the 31st of May was always going to be a tall order. And ultimately we've achieved it by the end of September. The accounts are now live on the website, and the public notice period is opened, so people can see and request through the Section 151 officer to examine elements of the accounts and maybe potentially place an objection. So that's standard practice, and it's all there, and the accounts are live. So in terms of the various components, I will talk you through that in the presentation. The report that you have identifies the various components. It's not only the accounts, it's also the annual governance statement, which talks about areas where we've done internal audits, potential weaknesses, and remedial actions that we're taking, things of that nature, to actually give you a bit of a background to the year that we experienced, which was a good one. The final outturn picture is good. Resources were not eroded. We've been able to maintain levels of reserves, which is always a good sign. So it was a successful year in that regard. The narrative statement is also there, which talks about the achievements, the Luton 2040 vision, and so forth, and is updated in accordance with colleagues' advice and information from various sources. So the accounts have been prepared in the usual way, and they are up for public inspection. And the audit we do not expect to happen until into next year. We await to have specific instructions from Ernst & Young on that one. Of course, you're aware we still haven't closed 18, 19 and the subsequent years thereafter. So we have a backlog that's got to be addressed. I'm not going to go into the issues around the backlog, etc. Tonight is about the draft statement of accounts for 22-23, and therefore I invite any questions, or you may wish me to do the presentation first and then ask questions. I'm entirely in your hands on that one, committee. Thank you.
I think it would be good, John, if you just go for your presentation. If all's in agreement, that would give people time to reflect, take stock, and then we'll just do a Q&A afterwards. Are you okay with that, John?
Thank you, Chair. Yes, I'm very, very happy with that. And Eunice, I think, has very kindly offered to do the presentation. For some reason, I can't get the Wi-Fi Maybe it's the distance I am from you. I don't know. But it's absolutely fine, and we'll go through, and I'll give you some more background as we progress. So, Eunice, if you'd be so kind to begin. So the reason we're doing this, there's main responsibilities, making arrangements for the proper administration of financial affairs. Absolutely fine. That's perfectly normal and usual, as are all of these points here. We've got to maintain the affairs with, value for money, efficiency, effectiveness, etc. Within our means, we've got to prepare the statement of accounts according to the proper practices, which I can go through, but they are standard and they're referenced in the report as well. So all that stuff is fairly bog standard, really, in terms of the normal year. Thanks, Eunice. So the process. Okay, scrutinised by the monitoring panel monthly, and overview and scrutiny. There are points, of course, where certain budget monitors are monitored throughout the year. We prepare the accounts in accordance with UK GAAP, which was the generally accepted accounting practice. SORP, Statement of Reporting Practice, and BVA, Best Value Accounting Code of Practice, various things that underpin how all local authorities do it. So we're all doing the same thing. All 490, whatever it is, local authorities across the country are working under the same regime to get consistency. So the accounts look the same. It aids comparator functions and so forth. So we're all working to the same practices. Okay, there is a scrutiny approved by the Accounts Committee and approved by the 31st of May. However, as I described, we have some delays to the end of September. The accounts are now live, and the bottom point there is around when Ernst & Young will actually be able to do the audit. We are thinking it could be as late as by the end of September next year, but we do wait for legislation, and we do wait for news from EY about how they intend to deliver that. In the meantime, the accounts are there, and they're labelled as draft. Thanks, Eunice. So there are four main statements, and as I say, every authority in the country will have the same format: the comprehensive income and expenditure, the balance sheet, movement and reserves, and the cash flow, and all those things knit together to give you the statement of accounts. And in our case, we've got a 150-page document with scores of notes that underpin each of these four elements. And I'm not suggesting you read through it all, of course, but you may well have taken a look through, and you may well have questions on these notes, and these notes are referred to within this presentation as well, because they adequately back up the content of those four key statements. Thanks, Eunice. So in June, the Executive Committee were alerted that we finished the year with a small deficit of 556k, and this statement just broadly links the two together, because accounting convention says that we account for other sort of below the line, if you will, entries such as pension adjustments, depreciation, to name but two big ones, that comprise part of our movement in reserve statement, and actually mean that we report in the statement of accounts a deficit for the year of 33.4 million, that 33,414 at the top. So it's nothing to be alarmed about. There are reasons for that, and the key is, in terms of management accounting, it was a small deficit at the end of the financial year, which was funded by reserves. So there's more information in notes in note 21. Let me just tell you the exact page, because it may be of interest to members to actually see the link between this statement and the statement that was produced in June, which was effectively the management accounts for the financial year of the revenue budget. So note 21 on page 77 is a list of adjustments, and it's mainly pension related, but also depreciation and a number of others. So there are reasons why the two things don't exactly match. An accounting convention and standard practice is the fundamental reason. Thanks, Eunice. So there's an income and expenditure statement, as I say, and the main issue here is the increase in the valuations of the assets owned by Bedfordshire Pension Fund, which is responsible for most of that 477 million credit that you see in the bottom right-hand corner. It was a small deficit the previous year. It was still showing a credit, however, because of other adjustments in the previous year. That 168 on the left versus the 477 on the right. That's the fundamental reasons between the two financial years. And again, the accounting convention is mapping in other things like tax arrangements, valuation of assets, depreciation. But the main issue here is an enormous change on the pension fund liabilities, and that is due principally to increases in interest rates, which have meant gains for the pension fund, which have dented the extent of the deficit. And we, of course, are part of that arrangement with Bedfordshire Pension Fund. So it's good news in a sense. I would add it's only a paper adjustment and it could change again in the future. So that's really part of the reason why it's kind of considered below the line. But that's the fundamental difference. And I'll probably refer to that as we go through the presentation. Thanks, Eunice. So on the balance sheet, we've seen a change as well. And again, it's ostensibly because of the pension arrangement, but also profitability of the airport, asset changes, and a number of other things. But it's the same arrangements, really. We can see that the net assets agrees to total reserves, and there's a change year on year. So it's really the changes to the balance sheet that are reported in the accounts. The accounts are group accounts, of course, and you'll see in many statements throughout the statement of accounts, we've got single entity, which is just Luton, and we've got group, which is consolidated accounts, mapping in Lal and Foxhall Homes, and maybe one or two other peripheral arm's length companies, but they are the two big ones, of course, namely the airport as well, you know, into the group accounts. Okay. Before I go on, sorry, I will say that there's more information about the Lal valuations and so forth on note 53, which is page 138 to 140 in the accounts. So you can see there about we're saying the valuation of the airport is at a point in time, and it may alter depending on arrangements at Lal. So it is there within the accounts, but it's kind of tucked away a little bit because it's part of the longer detail. Okay, the cash flow statement is exactly that. The changes here are around big changes to the things that we're managing around debtors and creditors, movement in provisions, changes to PWLB borrowing position, net repayments, changes in cash equivalents. So part of the statement, and this is where us accountants try to make sure that everything dovetails and maps together and we balance. The cash flow is part of the components, the balance sheet, the income and expenditure account, and the movement and reserves. It all knits together, and you can see that throughout the accounts, so that we are producing something that is true and fair and in according with accounts convention. Thanks, Eunice. Again, there's more detail about the cash flow on notes 48 to 50. So the balance sheet single entity, you may be interested to know a bit more about the changes, because I'm thinking about the penultimate column on the right, the one that says change. I'm conscious that two of them do, but the one that's the change between 21-22 and 22-23. So there's £477 million worth of changes there to net assets. And if we go on to the next slide, I've got a bit more detail about how that is comprised. Okay, so the next slide actually tells us some of the big ticket items. In the middle there, we've got 89 million is an increase in subsidiary loans to the arm's length companies. There's some big ticket items around property valuations, increasing cash, and debtors, central government housing benefits. And then the big one at the bottom on liabilities, 461 million, the pension scheme liabilities that are referred to earlier, and other increases in long-term borrowing, which dovetails not exactly but broadly with the subsidiary loans figure in the assets. So that kind of gives you a flavour of why there's been that quantum change between the two financial years. Thanks, Eunice. Usable reserves, as I alluded to earlier, we're pleased to not have made any inroads into reserves. If we look at earmarked reserves, we've actually added to them, which is always a good thing. There's a whole raft of earmarked reserves worth now 91.4 million. that are identified for specific issues. There's a general reserve, which is unchanged at 14 million. That's the very top one. And then, of course, there's a housing revenue account, a slight increase in proportionate terms, quite substantial, and school reserves, which I'll come to as well later, with some money on the balance sheet with regard to capital reserves as well, probably indicative of some of the slippage we've seen in the capital programme, where the money's still in our accounts, in our coffers, waiting to be expended on certain capital items. So this brings all of that home, really, in terms of usable reserve movements. Thank you. Those are effectively the big items on that previous page, which we've covered. Okay, school reserves. Quite frankly, here, 51 schools. The sum total of this was a net reduction in reserves. So they went from 25 million to 24 million across the financial year, and this is just the summation of all of those. And of course, we have an individual amount held in respect of each Luton school within our accounts, but that's the summary, and we felt it appropriate to just put a quick slide in to cover the schools. Okay, thanks, Eunice. So the group accounts, as I say, essentially cover Lell and they cover Foxhall Homes, and they are inbuilt within the accounts as I described earlier. You'll see the statements with single entity versus group entity next to one another, so we can actually understand that how the two differ. Thank you. And the annual governance statement is covered within the accounts that we present, and it covers these sorts of things. So it's actually looking at weaknesses and remedial actions, outstanding actions, and so forth. And there was nothing huge to report for last financial year. Have a look through, see what you think, maybe ask questions of Kanchan, Chief Internal Auditor, if there's anything that catches your eye, because there's a lot of work that goes on in internal audit, major source of internal check and independent review of our own workings, completely separate from what EY do, of course. So that's covered within our own annual governance statement, which exists within the statement of accounts. Thank you. And just to give you some assurances about the steps we take, and part of this sort of links into the fact that we've had those delays. There's some processes that we go through to maintain adequate quality assurance here. So we have a detailed timetable with designated tasks allocated to individuals in my team. Initial draft prepared by the financial accounting manager, and that's the post I've had some trouble with. I've had 3 people do that job in the last year or so, and we thought we'd appointed a new incumbent, but that hasn't worked out either. So we're still looking. In the meantime, I have an agency member of staff who's done a sterling job, but as you know, agency people are a bit dearer than our employed staff, and we wish to steer clear away from that and get people employed by the council on a long-term basis so that we can have some sort of continuity. So that's what I'm looking forward to having, but we're a little bit away. Okay, I would do a QA as well, and you're looking at last year's figures, this year's figures, challenging the differences, trying to understand the differences. You can spot errors. It's a huge document. Lots of people involved, and it needs this QA process to make sure you can get it as tight as possible, as accurate as possible, so that I can actually say to Dev, you can sign these accounts as a true and fair view of Luton Borough Council's accounts for the financial year. And that we achieved, like I say, at the end of September. He wasn't going to go on holiday until we got to that point. So there we are. That was good. And as I say, the accounting convention, and the final agreement with the Section 151 officer, and yes, we've looked at all those issues around comparators, reasonableness checks, etc. So there's quite a lot in it, and it's great to get to this point where I can share it with the committee, and I'm now happy to answer any questions. I would just add, because it's 150 pages, members may wish to have a closer look in the cold light of day, and by all means email Dev or I, and we'll get back to you, because there's if you said to me page 36, there's a figure down there, it's the chances of me having the answer at my fingertips are remote, but we can always try, but I'm more than happy to receive correspondence separately because of the size and breadth of this document. But in general terms, there may be a number of questions you have, and thank you, Chair.
Thank you, John, for a comprehensive and a nice induction for those who are new. Have my colleagues got any questions that they would like to ask the Chief? Ooh, that's good. I like that. I'm going to indulge my new councillor to the council, Councillor Malik, if you can ask the first question.
Good evening. First of all, I have seen your presentation, which is very good. And if you seen on the balance sheet summary, page number 4, there are 2 items are appearing: total usable reserve and total unusable reserve. If we are seeing on the page number 6, so there is a summary of usable reserve, but after that I haven't find any summary of usable reserve, which they are. Can you please guide me? Because on the balance sheet, it says assets and liabilities, long term and short term.
Is that okay, Councillor Malik? Okay.
Usable reserve increase, and there are some miscellaneous expenditures like 0.2 million. What they are in miscellaneous? Yeah, in page number 6 on your presentation.
Chair, would it be possible to ask colleagues to use the mic?
Sorry, Chief. There we are. Yep, I've got the mic on. Yeah, so we will have a look at that 0.2 million unusable reserves, was it? Sorry, it was usable. Miscellaneous. Okay, Councillor, I'm happy to look into that for you and get back to you. Okay, there will be an explanation. Reason being, the spreadsheet that we use to underpin these figures is finite, and it goes right down to expenditure income code on the ledger. So we'll be able to find out.
Sorry, John, when you send a response to Councillor Malik, can you copy in everybody so everybody's in the loop, please?
Absolutely, Chair.
Thank
you.
Colleagues, I think there was Councillor Underwood. Did you have your hand up? I think you did.
I didn't, Chair, but yes, I do have a question. Thank you. Is the income that the council gets, is that all taxable?
Thank you, Councillor. As a local authority, we're not paying tax as such. We suffer VAT. Obviously, anything to do with group accounting has got a different tax regime entirely. So our income would not be subject to income tax, as it were.
Oh, okay. Yeah, thank you. I have a question about the long-term investments on page 106, 107, about the nature and extent of risk of our investments. First question is, there's the statement says recent experience has shown it's rare for such entities to be unable to meet their commitments. We have 15, we have certain amount of money invested in UK local authorities. Is there a risk there that those investments are at risk?
Thank you, Councillor. No, we do take advice before we borrow, or indeed before we lend to other local authorities for obvious reasons in the current climate. So I would say there's little risk because we would have done our due diligence. We do take advice from external treasury management consultants, and we pay a fee to have that advice each year, and it's very useful.
Okay, presumably that applies to all of the other items, all the other investments in that table on.
Yes, it does. Yes, that would be right. Thank you.
Thank you.
Colleagues, anybody else got any questions they would like to ask John? Right, all right. Councillor Hussain M, and then Councillor Hussain J.
Get it right. One minute.
We might be related, who knows?
You know. Can I just ask you, in terms of the school results, maybe you may or may not be able to answer that question, because from my understanding was that the schools were now more but in some of the schools were a very difficult position even to have, looking for even making some of the staffs redundant. So is there any specific concern that you may have where their schools are having a very large reserves, yet at the same time, they are cutting the staffing down? Is that, are you any aware of that, or any of your colleagues? Because that would be an interest to us.
Yeah, thanks, Councillor. There would be a reason for that, and I did look through the list. It wasn't necessarily any a specific school. I suppose it's actually the sort of strategic path that each of the schools is following. That their income is based on pupil numbers, of course. Pupil numbers go up, their income goes up, and vice versa. So it must be that sort of transition in some cases. So I haven't got any specifics, but I'm not aware of any particular alarms going off with specific schools. That would be probably a question for the school's accountant. We could have a look at that if that would help, because there may be a report somewhere that does actually identify some specific school by school. But as we saw, the figure has dropped by 800 grand across the year. So that suggests that certain schools needed to use some of their reserves, and there could be reasons for that. So we could look at that if that would help, Councillor.
It will, because we had in the past where, for some years ago, where the school was in a special mayor and sitting on £250,000 reserve, and I found that very, very odd that you were in special mayor yet you were sitting on such a huge reserve. Why are they not using it? So I think for that reason, local authority has to be challenging them as well. To say, even though it is obviously it is their governing body that makes the decision, but our role as such.
Yeah, and indeed, Councillor, we'd probably have to look at the specific strategic trajectory of those schools that have drawn down, because they may have had specific projects that were maturing. So there could be any number of reasons. So we'll have a look at the overarching report that covers it. Yeah, thank you.
Can you respond to Councillor Hussain, if you could let us
again? Yeah,
because quite a lot of us will probably be on governing bodies, or
indeed,
working in partnerships within the town. So that will be used. Thank you, Councillor Hussain.
Thanks,
Councillor Hussain J. Oh, and Robin, Chief, I do see your hand up. Okay, thank you.
Yeah, thank you, Chair. I think my first question, the Chief Accountant has already answered. It was around miscellaneous, because I was struggling to find that, but I think you're coming back on that. My only, if you could just clarify regarding the big ticket item pension reserves and so on, what do you actually mean in this statement that that the pension reserve absorbs the time differences arising from differing arrangements for accounting for post-employment benefits and for funding benefits. And so what does that exactly mean?
Okay, as far as I understand, and look, again, we might need to clarify it, but
Yeah.
because the pension fund actually accrues benefits for the future, and it's also paying for people that have already retired, they've always got to be mindful of the impact of the payments for those people that have retired. So any forecast they have, actuarial arrangements looking forward, have got to be mindful, firstly, of the current cohort of people in the system, and secondly, those folks that have retired and are drawing their pension. So, and of course, those people that are still paying into it, that are employed, that are yet to. So it is actually a rather a minefield area. And I think what I'm getting at is that their benefits have their investments have gone up because of the interest rates, and that's only positive at this point in time.
Thank you, Chair.
Thank you.
What might be useful, John, on the pension side is maybe just do a quick briefing to bring members up to speed how the 3-yearly actual review has affected us in our balance sheets, because it was not something that we had any control of, if I remember from the briefings I've had, because I'm on the pension board. So it's beneficial, but it doesn't mean that it will be beneficial in the future. And I think that would be very good for members to understand that fluctuation.
Indeed, because it's quite seismic.
In language that everybody can understand. Just a brief summary. I know it's a bit of a challenge.
Yeah. Let's have a go. Yeah. Okay.
Would that be helpful, Councillor Hussain?
Yes, Chair, that would be extremely helpful. Thank you.
Okay, thank you. But Councillor Underwood, oh, hang on. I've got to let the Chief in. Let the Chief in first and then Councillor Underwood. Go on, Chief.
Thank you, Chair. Just to supplement John's response to Councillor Underwood's previous question about taxation, obviously we would pay tax on any dividend paid by our subsidiary companies, but in the financial year that you're looking at, no dividend was paid by our subsidiary companies. So just for clarity, on income that's dividend, we would normally pay tax, but because we didn't have any dividend in the year, we didn't pay any tax on that. Thanks, Chair.
Councillor Underwood, you had your hand up again.
Yep, thank you. The delay to the audit of these accounts, is that solely due to the delays to the audits of the previous year's accounts, or is there any other reasons?
Thank you, Councillor. Yes, it's threefold, really. We're late in submitting the draft, but because evaluation's coming in late, because of my resourcing issues, and because actually a big chunk of it, if we're honest, was us servicing the 1920 audit with Ernst & Young. So I couldn't solely say it was totally to do with Ernst & Young, but certainly that's part of it, because there was a lot of work, a lot of resource going on to answer their queries for 2019-20, which we had to park at the end of March so that we could concentrate on closing the accounts. But Ernst & Young was still asking questions, so we were batting on two fronts, if you like. So that's a good chunk of the reason for the delay, Councillor. Yeah.
And to follow up on that, you're talking about recruiting staff, and you need a financial manager. I mean, is there any? Is that just the only vacancy? Are there other vacancies that need filling for you to do the job properly?
That's the chief one. That's the financial accounting manager, which is classically called the closure accountant. And that's an individual that's very good at this sort of stuff, understands spreadsheets, understands the detail, understands the accounting convention. So we thought we'd appointed somebody, but they dropped out at the last minute. So I've still got an expensive agency resource. That is the key issue for me in terms of getting this right for the future. It's having the continuity, because where you change from person to person, It's difficult to exactly understand how they did it last year, and that's been part of the problems. Because I've had changes in jobs. In terms of wider than that, yeah, in the systems, our good colleague Jeremy Newman retired this week, so we have a finance manager gap at the top of the systems team, which I need to overcome as well. And again, I've got an agency person doing that job, doing a sterling job, but again at a premium. So I'd like to get both of those jobs filled. And I was chatting with Robin last week about some of that strategy, and it's ongoing at the minute. We've got some new ideas to progress that, and it's high on my priorities. Yeah. Thank you.
Right. Councillor Skippleton.
Yeah, could I follow up on that? Is the problem with recruitment basically the same for the whole of this borough, in that we are competing with vastly more financially bigger councils in London that we aren't actually able to offer, in some cases, the same sort of package that the London boroughs can?
Thank you, Councillor. Robin wants to. Do you want to take that first, Robin? Sorry.
Yeah,
Chair.
thanks, John. Yeah, I will do. So the recruitment issues that you're discussing are not defined just to Luton Council. Actually, there is a recruitment crisis across the whole of the country for professional, skilled people. When I speak to private sector organisations across the town and across the country, they likewise are struggling to be able to recruit and attract the right talent levels. If you look at the position of our auditor, Ernst & Young, they've had recruitment issues as well. I was in London on Monday getting a briefing from DLUC with 40 other chief executives. And one of the biggest risks that chief executives there were talking about was recruitment. So this isn't an issue that's bespoke to Luton. It's not an issue that's bespoke to Luton Council. It's an issue that's being felt nationally by companies and organisations across the country. Thanks, Chair.
Thank you. And if I can just add what the Chief was saying, on the organisation that I'm national chair for the National Council, APSI, of which we're a member of, it's something from, as we were coming out of the pandemic, we were talking about the challenges to recruit within for local authorities professional roles. We were having debates about that, and it's something that hasn't gone away. I would say different nations have slightly different challenges. So some of the challenges we have in England, Wales don't have for certain professions, but on the whole, it's across the sector. And one of the things I would say is the challenge for the public sector and I'm quite happy to hold my own and say this, the public sector has not been made to look attractive for generation millenniums and Z for the last 40 years. Yes. So there's work to be done to make those of working age to see that it is attractive, but it's not just unique to Luton. So I just wanted to add that in. And can I ask members to just stay back, because there's just something I want to bring you all up to speed at the same time than sending an email that I need to remember to do, if you don't mind, and the Chief. That would be great. Okay. Any more questions? Councillor Underwood. Oh, okay. You both put your hands up first. Right. Councillor Underwood and then Chief.
Thank you, Chair. Just a quick one about procedure. When the accounts go to Ernst & Young, will it be in this sort of format? Is it this sort of detail, or is it a much more detailed document?
Actually, I sent them the electronic versions last week. So they have them in Word format at the minute. So yes, they have chapter and verse. They have exactly what you see before you. Yeah.
Right. Councillor Farouk, you haven't asked any question. I know you just don't do that to me, Jackie. But is there anything you would like to ask of the chief accountant at all? But
Is there anything that we are concerned regarding the budget for the future and the past that we should be worried about? Or we should be keep looking to it?
Thank you, Councillor. I think it's separate from what the statement of accounts is. There are issues with the quarter one monitor. There's pressures that the council's dealing with right now. That would place a concern. I'm pleased to say that we haven't eroded our reserves. Great, but I can't hand on heart say that there won't be an impact as we deal with the current financial year.
Chief and then Councillor Hussain.
Thanks, Chair. So just to come back on and again supplement John's point there, I think that local government across the country is concerned at the moment at the state of finance for local government. If we look at the position that we have against the position that we had back in 2012 on a like-for-like basis, you know, we've had to take out of the budget approaching £200 million to date. We've got a further £30 million to take out over the course of the medium-term financial plan. As John's quite rightly said, you know, we've got in-year pressures. I'm aware of many councils across the country that are struggling financially. We are not, and I repeat, we are not contemplating and are not close to being in a position of trouble. As John laid out earlier, you know, we've strengthened our reserves position over the reporting period that you're looking at, not weakened it. A number of councils across the country are utilising their reserves for future years to balance the budget. So I think to supplement what John said, you know, it's a very, very tough position that should be of concern to all of us. Thankfully, we're in a slightly better position than most local authorities. And just whilst I've got the conch chair, if I could, just to supplement your point about what employers are doing. As an organisation, we're doing a lot of work at the moment on our employee value proposition. So how we present ourselves out to the market, what we're doing to attract the best talent. And if you look at the success that we've had, particularly in the last 2 years, attracting incredibly strong, incredibly good senior managers, I think we're making progress. We just need to ensure that that's followed throughout the rest of the organisation. Thanks, Chair.
Councillor Treveria.
Thank you very much, Chair. I'm just about to apologise to the Chief Accountant. I'm about to refer to a specific page in the report. Could you go to page 158? Otherwise, we'll be confused. This is note 42, debtors. It might be easier if you go there first, rather than me try and explain what my question is exactly.
Page 158.
Yeah, it says note 42 on debt on
note
debtors.
42 debtors.
So with regard to public corporations and trading, there's an asterisk next to that. What is that actually referring to? Is there another note somewhere that I need to be looking at for the purposes of that? Because I can't seem to find.
Oh, I will have to check that out, Councillor.
Okay.
Good spot. Yes, I should have said yes. If anything does look odd, such as this, we have the opportunity to tweak it. I will have to look back. That could be a legacy asterisk from a previous year,
Okay.
and there may or may not have been a comment that I could add or come back to you on. Yeah, I will come back to you on that. Yeah. Fair enough. Thank you. Thank you for raising that for my attention. Yeah, thank you. We will look into that. There may have been a comment in the previous year. If that we don't, I'll come back to you. That's the best way to deal with that one. Thank you for raising that. Thank you, Chair.
Thank you. Right, colleagues, have you got any more questions you would like to add on the agenda item? So if we just go back to approval of the draft statement of accounts, the committee is recommended to review and scrutinise the draft unaudited 2022-23 statement of accounts and the draft annual government statement and make any comments or recommendation to the Director of Finance as appropriate in advance of the audit. What we've also agreed that members have got time to, after today, to write to the officer if they identify anything further in the report. Okay, for the notes. Yep, thank you. So next is, thank you, colleagues. I think we've finished. So it's time, it's now 18:52. Thank you for your attendance. Can you just sit and remain while we